Your credit score isn't just a number. In the financial world, it's your image or a resume. It's like a key that can unlock doors to better financial opportunities. This score can significantly affect your financial life. It plays a key role in a lender's decision to offer you credit. Lenders are more likely to approve you for loans when you have a higher credit score and are more likely to decline your loan applications when you have lower scores. If you are watching this video, it is very likely that your credit score is also low. Before we move to improving the credit score, it is critical to understand the 5 main factors that impact your credit score. Number 1 is payment history, which contributes 35% to your credit score. Lenders want to know if you have paid past credit accounts on time. Number 2 is credit utilization, which contributes 30%. This measures how much of your available credit you're using. Third is the length of credit history, which has a 15% impact on your credit score. The longer your credit history, the better. 10% goes to the types of credit accounts. It is a mix of different credit types, like loans and credit cards. And the 5th one is the hard inquiries 10%, which makes 10%. Each time you apply for credit, it can slightly lower your score. Now that we know what's impacting your credit score, let's move to 10 steps to boost your credit score in 30 days. First things first, you need to know where you stand. You can check the credit score categories on the screen. If your number is less than 739, you are probably in trouble. You can't fix what you don't understand. So your initial move is to get your credit reports from the 3 major credit bureaus: Equifax, Experian, and TransUnion. The good news is you can request a free copy from each bureau once a year through annualcreditreport.com. I'll leave the link in the description. Once you've got your reports in hand, it's time to dig in. Start by checking your personal information. Is your name spelled correctly? Is your address up to date? Mistakes here can lead to your credit data getting mixed up with someone else's, and that can be a problem for you. Next, go through your payment history very carefully. Remember, payment history makes up 35% of your credit score, the largest chunk, so you have to make sure it's on point. Look for any late payments or defaults that seem off. Maybe you paid a bill on time, but it's listed as late. Errors like these can drag your score down unnecessarily. Seems good? Then, assess your credit utilization. This accounts for 30% of your score. Are the balances listed accurate? If a credit card shows a higher balance than what you actually owe, it could be hurting your score. Make a note of any incorrect information you may find. Now, check the section on hard inquiries and new accounts. Each hard inquiry can cut points off your score. Verify that all the listed inquiries were authorized by you. If you spot any you don't recognize, it could be a sign of fraudulent activity. Finally, review the list of your open accounts. Are there any accounts you don't recognize? Unfamiliar accounts could indicate identity theft, which needs immediate attention. Finding errors on your credit report is not uncommon. In fact, a significant number of people discover inaccuracies, and when these errors are corrected, it can lead to a quick boost in their credit scores. Make a note of any incorrect information you may find. Mistakes on your credit report can have a big impact on your score. Even a single incorrect late payment can drop your score by dozens of points, and that's something we can't afford if we're trying to boost it in 30 days. Here's what you need to do next. Dispute those inaccuracies. Each credit bureau has a process in place for disputing incorrect information. You can do this online, by phone, or even by mail. I'll leave the links in the description to help you get started. First, gather your evidence. If there is a late payment marked incorrectly, for example, you'll need a bank statement or other proof showing that you paid on time. The more documentation you have, the better. Once you submit the dispute, the credit bureau is required to investigate. This usually takes around 30 days, and if they find the information is wrong, they will remove it from your report. When errors are corrected, you can see a quick increase in your credit score, sometimes within a matter of weeks. This step is one of the most effective ways to give your credit score an immediate lift. One of the most important factors in your credit score is your credit utilization, which makes up 30% of the total score. This is basically a measure of how much of your available credit you're using. The more debt you have compared to your credit limit, the worse it looks. For example, if you are spending only $5,000 while your available credit is $10,000, there's no point in getting extra credit. So if you want to raise your score quickly, paying down high credit card balances is a key move. Here's how you calculate it. Take your current credit card balance and divide it by your total credit limit, then multiply that by 100. For example, if you have a $5,000 balance and a $10,000 credit limit, you're using 50% of your available credit, which is way too high. Ideally, you want to keep your credit utilization under 30% of your total credit limit. So, if possible, make extra payments on your balances to bring that percentage down. Focus on paying off the cards with the highest balances first. Here's another tip. Spread out your payments. Instead of making just one big payment a month, try paying twice or even 3 times a month. This can lower your reported balance when the credit bureaus calculate your score. By paying down your balances, you will improve your credit utilization ratio, and this can give your score a significant boost in just a short amount of time. Lower balances, higher scores. It's that simple. Another smart move to improve your credit score fast is to request a credit limit increase. Increasing your credit limit can have the same effect as paying down your balances. It lowers your credit utilization ratio, which, as we know, makes up 30% of your score. Here's how it works. If your credit limit goes up but your balance stays the same, the percentage of credit you're using goes down. Let's say you have a balance of $3,000 on a card with a $10,000 limit. That's 30% utilization, which is good. But if your limit increases to $15,000 and your balance stays the same, your utilization drops to just 20%, which is even better, and that easily pushes your score upward. How do you request a credit limit increase? It's actually pretty simple. Most credit card companies allow you to request a limit increase through their app or website. Sometimes, you can even call customer service and ask directly. Here is the tip. When you ask for a limit increase, be aware that some issuers may perform a hard inquiry on your credit, which could temporarily lower your score by a few points. Before you make the request, check if your credit card company does a soft inquiry instead, which won't affect your score. Remember, the goal here is to use less of your available credit, and a higher limit helps you do that without changing your spending habits. It's a simple but powerful trick to push your credit score in the right direction. Here's a credit boosting strategy that most people use to boost their credit score, becoming an authorized user on someone else's credit card. So when someone adds you as an authorized user to their credit card, you get to inherit their positive credit history, if they have one. Now, this strategy works best when you choose someone who has a strong credit profile. Ideally, choose someone with a long, positive payment history and low credit card balances. The key is to make sure that person is responsible with their credit, because if they miss payments or carry high balances, that can hurt your score too. You don't even have to use the card to get the benefit. Just being added as an authorized user allows their credit history to show up on your credit report. You can a trusted family member or close friend who has solid credit if they'd be willing to add you as an authorized user. They can usually do this by contacting their credit card issuer and requesting to add your name to the account. When it comes to your credit score, nothing is more important than paying your bills on time. In fact, payment history makes up 35% of your score, the largest factor. One missed payment can seriously hurt your score, but there is an easy way to prevent this. Set up automatic payments. By setting up auto pay, you ensure that your bills are paid on time, every time. This way, you don't have to worry about forgetting a due date, especially with multiple accounts. Most banks and credit card companies offer this feature for free. Even with automatic payments in place, it's still a good idea to monitor your accounts to make sure everything goes through correctly. This one simple step keeps your payment history clean and helps you avoid any credit-damaging late payments. Pay your credit card bills before the statement closing date, not just the due date. This is not a hack, just a simple fact. Not getting the statement closing date is when the credit card company reports your balance to the credit bureaus, while the due date is when you must pay at least the minimum amount to avoid late fees. If you pay before the statement closing date, the balance that gets reported will be lower, reducing your credit utilization. For example, if your card has a $1,000 balance, but you pay off $500 before the closing date, only the remaining $500 gets reported, which means a lower utilization ratio. By timing your payments this way, you can reduce the reported balance, and that can lead to a quick boost in your score without changing your spending habits. People who are trying to boost their credit score make a simple mistake that backfires: opening a new credit account. But opening new credit accounts can hurt your score in the short term, especially if you are aiming for a quick improvement. Here is why. Every time you apply for new credit, the lender performs a hard inquiry on your credit report, and that can knock a few points off your score. The length of your credit history plays a key role in your credit score. It makes up 15% of your score. So even if you are not using some of your older credit accounts, do not close them. Here is why. The longer your credit history, the better it looks to lenders. Even if you have a credit card you rarely use, keeping it open helps maintain a longer credit history and a healthier credit mix. If you are worried about fees on unused cards, try using the card for a small purchase every few months, just to keep it active. Now, last but not the least point, If you are struggling to make payments or have fallen behind, communicate with your creditors. Proactive communication can help protect your credit score from further damage. Most lenders are willing to work with you if you explain your situation. You can ask for options like payment plans, due date adjustments, or even temporary relief. This helps you avoid late payments, which, as we know, make up 35% of your credit score. If you work something out, this is really going to help you. And that's it. These were the 10 actionable steps to help you boost your credit score in just 30 days. Start applying these strategies, and you will notice your credit score improving dramatically. If you found this video helpful, be sure to like, share, and subscribe for more content like this.